Hello, and welcome to the second in a series of 3 interviews looking at defined contribution. Now, for those of you who have seen the first interview, you'll know that I'm Mark Dunn and I'm the editor of investment magazine Portfolio Institutional. And once again, I'm going to be your host. Now, the first interview looked at the retirement landscape and it did touch on ESG. Well, in this interview, we're going to be taking a much closer look at how ESG can be integrated into portfolios. And to discuss this, I'm joined by 2 insiders. So, Mo, could you start the introductions, please?
Great, thank you, Mark. I'm very excited to be here. So, Mo Masood, I'm part of the sustainable investing team within the ETF and index business at BlackRock. I principally work very closely with institutional clients, helping them specifically with their sustainability objectives.
Thanks, Mo. Great to have you on board. And for those of you following this series, might recognise a second member of this panel. Yeah, he's back for more. Mark, could you give us a refresher introduction, please?
Yeah, absolutely. Look, hopefully I've got something additional to say as well this time. I'm Mark Gyrey. I'm the head of the EMEA insurance segment and UK asset owner consultant coverage at MSCI. It's my role really to engage with the pension scheme, master trust and unit-linked pension providers in the UK market and across EMEA, and to really help facilitate their understanding of ESG and climate solutions and equally how they integrate them into their investment propositions.
Great. Mo, Mark, thank you very much. Thank you. Okay, I think a good place to start would be, it's no longer a question of should the net zero transition happen, it's how's it going to happen, but the exact path to get there is uncertain. So, Mark, could you start us off by telling us how you're viewing the transition given such uncertainty?
Yeah, look, firstly, I think the one thing that is very clear is climate change is an existential risk to the human race and is something that not just us, as in Mo and I, but the market as a whole, the regulators and the whole planet is taking very seriously. Equally, as well as being a risk, it's also an opportunity, and it's an opportunity for investors and asset owners alike. And whilst, quite clearly the path to net zero is probably not going to be linear and will not be straight, I think what's really important that investors get clarity on where they are today. And I like to think of this as knowing what their true north is. And the way I also think about this is perhaps it's their commitment to net zero. So they know where they want to go. So in uncertain times, they've got certainty on where they want to be heading towards. Now, of course, if you've got a point in the future that you want to achieve and get to, it's also important to know where you are today. So I referenced this in the last session for those that watch. It was taking a bearing. So understanding where you currently are relative to your end objective, and therefore, in the event of a non-linear transition to a net zero, which of course I think we're all probably clear will be exactly where we are, then you've got at least you know where you are, and you have a bearing, and you also know where you want to go. So navigating that should be somewhat easier in the sense of you're able to forge ahead because you're armed with those 2 components. I think increasingly the more that investors take action, the more that investors make commitments, really the more that we'll see the rate of change and the transition to net zero going forward.
Great. Thank you, Mark. And Mo, what's your view on this?
Yeah, absolutely. So we certainly believe that the transition is underway. However, there will be, a massive sort of reallocation of capital that would be needed to further progress with this ambition. And from a portfolio lens, there are sort of 3 dimensions that we are monitoring and looking at. One is the pace at which the transition will take place. So it's something that we want to be monitoring. Secondly, also the volatility, interim volatility that can take place. It could be due to supply shocks. It is quite important to factor in as well for investors. And thirdly, it's around climate policies as well. So we believe these are sort of the wider few pillars that can be quite relevant and for us to be mindful of as we think about portfolio construction. And fundamentally, right, if we think about the the shift, it's really going from high carbon intensive production towards those of lower or zero carbon production. So that's kind of the shift that we really need to take place, and hence that's where the investment needs to focus on as well. And as a result, this implies that we need to be considering and working with companies that currently have high carbon emission profiles, but have actually set credible targets to evolve their businesses and change the way they operate. And we need to be invested in those exposures as well. I think an additional point to mention is also around again, on the portfolio context side, is just around the pricing of some of these assets and securities, because currently we feel that the climate risks and opportunities are not fully priced in for a number of securities, and that's an area to monitor as well.
Thank you very much, Mo. Mark, what will be the key drivers behind the transition path?
Look, I think one of the key drivers we'll probably see will be a continuation and an acceleration in regulation. One of the areas that has really created action, and that's really what we're looking for, action, has been regulation. The introduction of TCFD reporting requirements, the implications for large DC pension schemes, for master trusts and rolling into smaller schemes as time goes on. I think that point that gets referenced, which is what gets measured and reported gets managed, and to my point around taking a bearing and having a true north, I mean that's really going to be fundamental, and the increase in regulation will aid that. I think that will definitely be one of the areas. Fundamentally though, innovation, and that's innovation across the whole ecosystem. Innovation from index providers, from asset managers, innovation in terms of the solutions that are available both across master trust and fund issuers in terms of the unit linked and pension life providers, creating the products that enable the adoption of ESG and integrated solutions. So that's really, really important. And that's, just follows on from their ability or their actual sort of setting of policies, thinking about how they integrate solutions and then how they're reporting them.
Thank you. And what's going to drive this for you, Mo?
Yeah, so I think in addition to the points I was mentioning earlier, and echoing some of the points that Mark mentioned as well, I think for us, technology is obviously going to be a key driver for the innovation. We see, in particularly to help decarbonize some of the harder to abate sectors. And we've been seeing that direction already, right? So if you look at the trends in terms of the costs for solar or batteries, that have generally been going down, and this will help fuel the transition. We know that there are ambitious plans, for example, with the EU around green hydrogen, etc. So all those aspects should help push that direction. Secondly, is also around social preferences, both from a consumer as well as investor perspective. So we have unfortunately been seeing some of the impacts of extreme weather cases. I think there is, if you look at this IPCC reports, they do seem to suggest that what we've experienced so far is just a fraction of what could be happening in terms of the physical impact of climate change and extreme weathers. And the more we see such events, that could actually be a trigger to push social preferences further and really accelerate the pace at which the types of products that are being bought, the types of investments that are being made will be prioritized accordingly. And so I think that's definitely going to be a point. And I mentioned it earlier as well around climate policy. We've seen that a bit in Europe, obviously with with goals to reduce dependency on oil from Russia and actually prioritize the net zero transition, and that is really energizing and fueling the need further to move to net zero and alternative sources of energy sooner.
Thank you, Mo. And staying with you for the moment, if we could, the transition is becoming increasingly pivotal to investment goals. So how should investors consider the risks and opportunities in front of them?
Yeah, absolutely. It's as we see more and more investors consider ESG and sustainable objectives as part of their portfolio construction, what we find is that being able to offer the right choice and the transparency around how portfolios are being constructed is actually really important. So what we've seen is really from some investors focusing more on, let's say, exclusionary preferences to divest or reduce investments in, let's say, fossil fuel sectors, towards others that are focused more on reducing carbon emissions at a portfolio level. We've also had investors consider the green opportunities as well, so be investing actively in companies that are generating revenue from alternative energy sources, or in technologies that promote energy efficiency or sustainable water and agriculture. And often it's a combination of such metrics that get put together at a portfolio level. And I think in addition, we also find that they're still very much aware in terms of the risk metrics versus their starting universe or their reference benchmarks. So often we find that there can be some active risk controls like tracking error or specific parameters around sector and country deviation as well, that allow investors to get the sustainable exposure, but within a risk controlled framework.
Thank you. And Mark, how are you assessing the risks and opportunities?
Thank you. So look, Mo covered some really good points there, and I think that point, a couple of points around the assessment, around the available data sets, the indexes, the benchmarks that are available is a really important aspect. I think equally, and I referenced a point around regulation earlier, that's a top-down impact to what kind of providers are doing, but there's the bottom-up impact. There's the reality is that in DC we're dealing with members, and members have, it's their pension pots. And while solutions providers are obviously looking to create something that meets their objectives, one of the objectives is obviously to provide a solution that members want. And I think overwhelmingly, and we've referenced it in some of the earlier questions in the last session, there's a requirement for ESG and climate integrated solutions, and therefore what we will see, and as referenced there by Mo, will be an increase in adoption of ESG indexes, of climate-related Paris-aligned type indexes, to create broader choice, and that will be something that will manifest further from here.
Great, thank you. My final question: what data and tools have emerged to help investors make better choices, Mo?
Yeah, sure. So actually, linking back to the point I was mentioning earlier, that as sustainability becomes a key consideration for a number of investors, what this really means is that the way securities are selected at a portfolio level, the way they get weighted within the portfolio, which are, the key aspects and attributes of a portfolio itself, the data and the data becomes extremely critical, that essentially enables that objective to be met. So what we found is that there is a wide set of data sets that are now available, working very closely with partners such as MSCI and other data vendors. This is now possible for us to look into revenue breakdowns of companies. So, what sources of revenue do they generate money from? Is it more green activities? Is it more around fossil fuels? We have that indication, and that can allow investors to overweight, underweight certain companies. We also have carbon emissions data, which is becoming quite central for a number of investors specifically focused on the climate side. And this can be, the scope 1s, the scope 2s, and also scope 3 type data sets. So again, there's a wide set of choice there. And additionally, there are more new forward-looking data sets as well that are coming out, because what we find is that companies are increasingly setting corporate targets as well to reduce emissions. And there are temperature data sets that are out there now that look at the projected emissions of companies and comparing them to the budgeted needs that are required to be able to meet the net zero objectives. So a combination of current and forward-looking metrics are becoming available, and that really does power the portfolio construction side for us. And I think what we do expect is that this data will get better, and as Mark alluded to earlier, in terms of the reportings that companies are now doing, that will further make this better data sets for us to be using, and hopefully more wider options and more specific areas for investors to be able to target.
Thanks, Mo. Thank you. And Mark, what are you seeing that's emerging that's helping investors?
So I think one of the areas is ensuring that solutions that you have are available and meet the climate goals globally, really, different jurisdictions, different regulation, different requirements, investors with different investment ethos, etc. So the growing need for solutions that will do that, and as MSCI, as a founding member of the Net Zero Financial Service Providers Alliance, we committed to ensure that all of our services and product meet those globally recognised climate goals. Equally, I think transparency is a very important point, and Mo's kind of alluded to some of the new data sets that are available. And we spoke previously about education on the last session and about the requirement for visibility for investors and providers alike. One of the things that MSCI has done is it's made some of its metrics available. So Mo referenced a couple of them there in terms of implied temperature rise, in terms of our corporate climate target scorecards, our ESG rating scorecards. You can now go onto MSCI website and search either using ticker or by name 2,900 securities, and it will give you a high level of climate information about each of those companies. Equally, and as noted, we take those same data sets and we put them into and build them in line with either managers we're engaging with or in service providers into ESG, climate aligned equity and fixed income indexes to provide another tool for the market to utilize.
Great. Mo, Mark, thank you very much for discussing what is an important topic for investors. I mean, these are strategies that keep evolving, so it's good to know where we are at the moment. So thank you. Next up, the final interview in this series looks at defined contribution and private markets. Until then, goodbye.
Cheers, Mark. Thank you.